All right, in this lesson, we're going to walk you through the statement of cash flows from an example standpoint. So we're going to go from top to bottom. Because of the way that the statement of cash flow is, I've broken this into many different sections. So it's kind of important to understand that not all sections will be visible at the same time. So you're going to really need to, follow along if you have a piece of paper or screenshot different parts of the screen so that you understand where the numbers are coming from, because I'm just going to pull numbers out of thin air, but really I'm not. They're going to be off this first screen that I'm going to show you in a second. So just wanted to give you that understanding, because you're going to go, where did these numbers come from? Well, they're on the next screen that I'm going to show you in a second. All right, so let's get started by looking at our example prompt here. So suppose that the income statement for Google company reports $95 of net income after deducting depreciation of $35. The company bought equipment costing $60 and obtaining a long-term loan of $70. So again, that's an example of getting additional information that we might need to do the investing and financing activity section of the statement of cash flow. So we need that $60 and $70 because there could be other ins and outs that we don't know about that we'll need to separate. So that gives us some ability to understand what the changes in those two sections are going to look like. So for part A, using a company's comparative balance sheet at December 31st, calculate the change in each balance sheet account and indicate whether each account relates to operating, investing, or financing, plus for increases, minus for decreases. And then prepare a statement of cash flows using the indirect method, which we'll show you on another screen. So first thing that we're going to do here is we're going to look at our comparative balance sheet, find our pluses and our minuses, and what type, where would they report on the statement of cash flow. So let's get going here. Let's start with cash here. Now, we won't necessarily use cash because remember, we're only looking for changes in non-cash here, but we'll just do it here just so that we know here. So we started the year with 35, we ended with 240, so our change here is positive 205. Now, this isn't operating or investing, it's just cash, so we're just going to put cash here. Then moving on to the next one. So accounts receivable went from 75 to 175, so that's a plus 100. And this is going to be operating since it's a current asset. So current assets, current liabilities operating, non-current assets are investing, and non-current liabilities and stockholders' equity would be financing. So that's kind of the cheat sheet that we talked about at the very beginning of this section. All right, moving to inventory. Inventory went from 260 down to 135, so it lost 125 or just decreased by 125. That's also an operating section. Equipment went from 500 to 560. That's a positive 60 change. That's going to go into in the investing because this is a long-term asset. Accumulated depreciation, minus 35. We really didn't talk about accumulated depreciation. Just know that that is the depreciation that we've talked about up here. So minus 35, it will go in the operating section. We'll talk about that when we do the operating section. Then we're going to skip total because we don't really care about total. We'll go to wages payable, went from 10 to 50. So 10 to 50 is plus 40. That's going to go in the operating section. Long-term debt went from 445 up to 515. That's a plus 70. And that's going to go into financing because it is a non-current liability. And then contributed capital is 0. So that would normally go into financing, but it's 0, so we won't worry about it. And then retained earnings, just for kicks and giggles, plus 95. And technically that would be operating, but we don't care because we're going to actually look at the transactions above to prepare a statement of cash flow. So that's what we have here. This is what we're going to need in order to prepare the statement of cash flows. So once we have this, we can start to prepare the statement of cash flows. So we're going to shrink some of these numbers and we're going to use some of these numbers. So let's look at part B, preparing the statement of cash flow. So this is what we have here. Now we're going to start with the statement of cash flows. And if you remember from the operating activities section, we said we always start with net income. So we're going to start with net income up at the very top. So net income in the amount of $95. We know it's 95 because it says right here $95. Then from there, if you remember, we're going to add depreciation. So there's two places that we can get this. The first place is we can get it directly from our accumulated depreciation here. Second place is through the question. Now, this would probably be a better place for it than using the accumulated depreciation on the balance sheet, because there could have been ins and outs, and those ins and outs might have net to 35, but you might not necessarily know what caused that. Did we sell some, so we got rid of accumulated depreciation? Did we do some depreciation expense, so now we have depreciation expense? So we don't necessarily care about the net ins. We care about the net ins, so that's what we want to know. So I would take whatever the problem is. So in this case, $35. So we're going to add depreciation. So we're going to add depreciation. And depreciation is almost always added of $35. And then we get to the other part. So we're going to look at all the operatings. And again, if you remember our rule, if it's a current assets, we're going to do opposite what it did when we add or subtract to our net income. If it's current liabilities, we're just going to do exactly what happened to that current liability. So if we look at, we see that accounts receivable is our first operating activities. So that's current asset. We're going to do the opposite. So this increased by 100. We're going to subtract 100 from the increase in accounts receivable. So we're going to subtract the increase in accounts receivable. Why? Because we didn't receive it, so we're going to take that away. All right, next one here is inventory. If you notice, inventory decreased by 125. So because it's decreased in its current asset, we're going to add 125. So we'll add the decrease in inventory. That takes care of the 125. Now we'll go down to the current liabilities. So current liabilities, we're going to do exactly what happened. So in this case, wages payable increased by 40. So we're going to add 40. So add increase in wages payable in the amount of $40. And if we were to add up all of that, we would get net cash provided by operating activities of 195. So again, super simple when we know the rules and we've done our job with our pluses and our minuses up at the top right-hand corner of the change in the balance from beginning to ending and what section it goes into. So super easy. Again, know the rules. All right, once we have that, now we can do the investing and financing section. So let's move on to the investing and financing. So again, we can go look here, investing, financing, but we can also go to the problem. So the problem tells us, they give us the context of what happened here. So if we do the investing activity, it says that the company bought equipment costing $60. So if they bought equipment, that would mean that cash goes out. So we're going to subtract purchase of equipment. And that purchase of equipment is $60. So we're going to subtract that. It's the only thing that we have in the investing activities. So we're going to total that up to 60 outflow. So cash used in investing activities is $60 because it goes out. All right. So let's look at our financing activities. We obtain a bank loan of $70. Because we obtained a loan, we received cash. So we're going to add in the financing section, obtain bank loan in the amount of $70. It's not negative, it's positive because we're receiving it. So we're going to put plus 70. So that's what our investing and our financing section will look like on our statement of cash flows. So now that we've done that, let's take a look at what the entire statement of cash flow might look like. So this is kind of it doesn't have the right headers. It doesn't have the who, the what, the when at the very top. There's just not enough space. And there's something missing at the bottom that we're not going to get to this moment. We will get to it in a second, but not at this moment. All right, so this is what it will look like. So these are all the numbers that we just put in the other few screens here. We've got the operating, we've got the investing, and we've got the financing. We've got our pluses and our minuses. And from here, what we need to do is total up all the sections to do the reconciliation. So one thing that we haven't talked about is what do we do at the very bottom? At the very bottom, we're going to reconcile all of our balances in the cash account. So we're going to take it from beginning to end with the changes in from these sections. So in this case here, we've got net cash provided or used in operating. So we have a plus 195, we have a minus 60, and a plus 70. That would give us 205. So the net cash change is a positive 205. Why positive? Because we have a positive 195, we have a minus 60, and a positive 70. So 195 minus 60 plus 70 gets us 205. So net cash change this year is $205. So once we know that, then we kind of do the reconciliation. So just picture in your mind, this would be at the very bottom of all of those three sections. So increase in cash was 205. We started the year with cash of 35. And again, I'm just making this up for now. Actually, I'm not making this up. Here we go. Beginning balance, $35, ending $240. Okay, just know that. $35.40. All right. I thought I was making this up, but I'm not. All right. So cash beginning was 35. 35 plus 205 gets us 240, which matches what was on our balance sheet. So 240 matches. I didn't get 35 in thin air. It came from the first screen, but I forgot. Okay, I thought that was depreciation, so no. 240. So $240 would be cash at the end of the period, which would match our balance sheet, which is what we're trying to do on the statement of cash flows. Our statement of cash flows is to reconcile the cash balance on the balance sheet. And it does perfectly with $240. So hope you enjoyed this walkthrough of the statement of cash flows. If it was a little bit quick, I mean, it was 13 minutes long, but if it was too quick, make sure you go back to the other 3 lessons where I actually like walk through the operating, investing, and financing videos or sections. Once you got that, then come back to this example and then walk this example with me. So hope you enjoyed this lesson. We'll see you in the next video. Hey guys, if you like this video, make sure you press the like button below. And if you're looking for worksheets that go along with all of these lessons, head over to my website at patrickleemsa.com or click in the link in the far right. And I've got your next lesson right over here. So just click that link and it'll take you to that video. So until then, we'll see you in the next lesson.